Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, October 2nd, 2019. I am Frank Ochoa, aka PivotBoss. Really quickly, I'd like to say thank you all very much for joining me yesterday afternoon for our monthly market outlook for the month of October. If you were not able to watch it live, or if you want to rewatch it, the recording is available at the website here. There is also a link inside this post so you can check it out. Alright, here's a look at the ES in the daily time frame here. You'll notice that we had quite a sell-off in the previous session. Price had an outside day down, bearish outside day. The way I define it is this high is above the previous session's high and the close price is below the previous session's low. So I look at the entire range for a bearish outside day. That is very, very bearish, especially to begin the week. I believe that the fact that price is holding below this previous month's midpoint, which is 57.5, suggests that we are likely headed to this blue line right here, which is the previous month's low. So here's your previous month's high, previous month's midpoint, and this is your previous month's low. And if price again cannot reestablish back above 29.57.5, 29.60, then that could lead to much more weakness ahead in the near term. 29.40 is very important. That's the breakout in previous highs. We're now below that by 15 handles, so that's quite a move already. So the fact that price is below this zone right here, again, any pullback even into that zone could still be a selling opportunity for this area right here. That previous month's low is coming in at, let's see, the price here is 28.89 even. So 28.89 is the target there. You also have your 200-day average, which is right below that in the 28.70s. And key range support way down here, 28.20 to 27.70 and change. So overall, this market right now is moving lower. It's had a failure to hold above the 29.60 level. Even if this thing were to bounce into that zone, we could go all the way across this range, even as low as the 27.75s. So right now, watching to see how this responds here today, but overall looking like a bit more weakness ahead. Now, if this market starts to form a tail for today, by the end of the day, again, we could still bounce and still find resistance here for another wave down, as this thing has been finding lower highs and failed highs along the way. Okay, let's take a look at the NQ here. Alright, here's the NQ. You'll notice here, big outside day down again yesterday. This one lagged the ES. The ES was much more aggressive in the downward price discovery. This one rejected above the previous session's high. Also rejected 5-day highs here, all at the same level at the 78.41s. That's also the FOMC key level from May 1st. The market right now showing additional signs of weakness, just hit new lows. Just hit another FOMC key level below from what is that, the 26th, so that looks like September. So right now we are on a downward path at the moment. We see kind of a rounded top here. 7,800 was the important level to hold there. It failed, and now it retested it and rejected. So all of that suggests that there could be more downside price discovery toward 7,400. Recent support here. That's going to be important. You have the 200-day that comes in at 75, so anywhere in this zone could be an easy target ahead. That could be 1, 2, 3 days out, depending on how this thing plays out. Again, 7,800 is the key level above. So even if price were to bounce this high, it could still be rejected for another rotation downward until price can really establish acceptance back above 7,800. All right, let's take a look here at crude oil. Okay, so crude oil right now, inside day at the moment. Crude oil trading just 48% of average range. You can see that in the previous session I mentioned that if it can't get back above 55s, it likely drops into 53. That's the next support level down. It's where the breakout was here, the retest. Price got down into 53s, hit 53.05 in the previous session after giving way and failing to get through 55 above. Went back to 53s and then bounced. Pretty decent bounce, especially with the overnight move here. Part of that bounce was aided by the API report that came out yesterday afternoon. API came in at a draw of 5.92 million barrels, so that tells us right there that we could be expecting something similar in crude oil, and if we do, that would be a big difference from the forecast. The forecast is for a build of 1.5 million barrels for crude oil. We have inventories later on this morning. So again, the path appears to the downside, especially based on seasonality. What I've mentioned before is even if we bounce here, any bounce could be a selling opportunity for continuation down. Failure to hold 53 opens up a big retest at 50.5, and below 50.5 has nothing until we get down toward the 42-43 zone. So big time support right now. We got to see how price responds off 53s. Lastly, we will take a look here at gold futures. Gold futures has pulled back quite a bit here recently. You can see the rounded top behavior here. This is the zone that I've been talking about the entire time. It's the 1490 level, 1490. And what I mentioned before is that if we rotated down below 1490 into 1480 to 1490, that could be a great buy opportunity for a continuation higher. But I also mentioned that if price cannot get back above 1490 and stay above it, that could be pretty significant. So because we're breaking down through the zone, if we try now to get back above 1490, which we are, 1500, but we can't find acceptance, then that could be a major retest from below that leads to another round of weakness. That could drop prices back toward recent support lows, 1415, perhaps even into the 1375 LVN, with 1388.40 being the 200-day. So this zone is very, very important. Can the market stay above 1490? At the moment, on an intraday basis, it looks like the market is doing its job in sealing off that 1490. What you have is a rally to 1490 from below. It was rejected. It kind of built some energy. Then it broke through 1490. Now it's bouncing after a retest here. That's the intraday 512 tick chart. So it looks like it's doing what it needs to do to seal that 1490 here. If there's a failure to hold that level today, then we could begin to see a failure overall. So 1490 continues to be the key level to watch in gold. Overall, I'm still bullish gold. Still believe it has a really good upside ahead, even likely as high as 1800 down the road. By this time next year. Well, where is it at? It could have hit 1800. So it's going to be very important to see, can price continue to stay above 1375? That's the major higher time frame weekly chart level it needs to stay above. We talk about this in the monthly market outlook, which we recorded last night. The link is inside this post, so if you want to check that out, you can do so. All right, everyone, have a fantastic rest of your day, and I will see you on the trading room. Take care and trade well.